The year 2022 was the expensive dollar year. In comparison to all other currencies, the superdollar appreciated. For the first time in decades, the dollar was worth more in Europe than the euro. Latin American currencies like the Colombian peso, Chilean peso, and Peruvian sol were all destroyed by the dollar. Mexico, however, is a notable exception. Yes, the Mexican super peso was one of the few currencies to compete with the pricey dollar, as you may have learned from watching my videos. Here in this chart you will see how much a dollar is worth in Mexican pesos. As you can see, during the pandemic the dollar went from 19 Mexican pesos to 25 Mexican pesos. But since the pandemic stabilized, the price rose against the dollar, and in the last few months it reached 17.95 pesos for a dollar, a level that has not been seen for 5 years. And as you can see, the trend continues downward, that is, the Mexican peso seems to continue to strengthen against the dollar. Why does the Mexican peso keep increasing in value relative to the US dollar? Will this trend continue or will it reverse? In order to be able to answer all of these questions, we will conduct an analysis in this video. Make sure to stick around until the very end because there's a chance the super peso might end. Therefore, we must first comprehend the causes of the dollar's and the peso's fluctuations. Usually, a currency's growth or decline can be explained by a wide range of factors. The following factors are the most crucial ones. First, a country's economic health, including its rate of economic growth, its unemployment rate, its inflation rate, etc. The second is foreign investment and exports. Third, the state of the government's finances, including its deficit and external debts. Lastly, the central bank of the nation's policy. However, the economy of the nation and the central bank's policies are currently the most significant factors that affect a currency's trajectory. These two components are interconnected. In other words, the central bank tightens its policies if a nation's economy is doing well. For instance, the central bank may boost interest rates in the event of economic growth, low unemployment, and high inflation. This would cause the economy to weaken. However, if economic growth is weak, unemployment is high, and inflation is low, the central bank will decrease interest rates to boost the economy. According to the rationale, if central bank interest rates are high, less people will want to borrow money because borrowing money will be more expensive. Because debt is more in demand when interest rates are low at the central bank, this boosts the economy. We can then start to examine why the dollar and the Mexican peso are where they are by keeping this logic in mind. Analyzing the dollar and the American economy will be the first step. According to data released by the government, here you will see that the US economy has grown in recent quarters. Then unemployment has fallen in recent years, reaching 3.5% in the last few months. Finally, inflation was high in 2022, reaching records not seen in the last 40 years, but it is coming down now, as you will see here. But now in this chart we are going to be able to see how the Federal Reserve has been reacting to this data. Well, as you will see, the Federal Reserve raised central bank interest rates dramatically from 0% in the year 2021, between 4.5 to 5%. They did this because of the high inflation they were seeing, and also since the economy was not in bad shape. By boosting interest rates, they are frantically attempting to reduce inflation. According to the forecast, the Federal Reserve is going to keep raising them until they get to 5% and stop there, but they will only stop if inflation keeps going down. If it does not go down or even starts to go up, they may continue to raise them more than 5%. Now let's examine the situation in Mexico. As you can see, the Mexican economy has been growing in recent quarters to 4%. Then the unemployment rate has dropped dramatically to 2.7% in the last month. Finally, inflation was high, reaching almost 9%, but has been coming down a bit in the last few months. Let's now examine the Mexican central bank's response to this statistics. As you will see, the Mexican central bank has raised the central bank interest rate from 4% in the middle of the year 2021 to over 10% today. They, like the Federal Reserve, also want to bring inflation down from its peaks, especially seeing that the economy is healthy in terms of growth and unemployment. But according to the forecast, the central bank is going to keep interest rates at these levels longer than the Federal Reserve. But, again, it all depends on inflation here. The Mexican central bank may increase interest rates further if inflation stays at its present rate and does not decline. But what do we learn from all of this? The two nations certainly appear to be in a similar scenario. They have strong economies, but because of excessive inflation, central banks have had to hike interest rates. But there is a difference here. Mexico's central bank raised interest rates before the Federal Reserve did, and raised them much higher. The Federal Reserve plans to raise them to 5% while the central bank will keep them at 10%. This difference in interest rates is very important. If the interest rate set by the Central Bank of Mexico is 10%, then the yield on any Mexican government bonds I purchase should be 10%. In a manner similar to this, purchasing U.S. government bonds ought to result in a 5% yield. Due to this distinction, many investors would undoubtedly choose to purchase more Mexican government bonds than U.S. government bonds. And that explains the strength of the Mexican peso in recent years. As you will see, the dollar went from being worth between 20 and 21 Mexican pesos to between 18 and 19 pesos today. The Mexican peso's trading links with the U.S. currency, however, are another factor that contributes to its strength. The United States and Mexico share a significant trading relationship. 80% of all Mexican exports go to the United States. And Mexican producers are paid in dollars by American importers. The producers convert these dollars into pesos right away, which increases demand for Mexican pesos and decreases demand for dollars, and thus explains why the peso is strong. Additionally, the two nations' trading connection is advancing steadily. As you may have seen in my videos, numerous industries are moving out of China and establishing new facilities in northern Mexico to manufacture everything from automobiles to appliances. If you are enjoying this video and want to be aware of new videos, subscribe to this channel and turn on notifications. All of this therefore suggests that the peso will strengthen in the future. Natural resources are another factor that contributes to the strength. All natural resource prices have skyrocketed as a result of the conflict in Ukraine. Due to the sanctions imposed by numerous nations on Russia, it was no longer viable to import Russian natural resources like gas and oil. As a result, nations that produce these natural resources, like Mexico, gain since they could export these goods. Additionally, as President AMLO now backs the oil sector, this helped Mexico's exports and strengthened the currency. Finally, the capital entering Mexico is a further factor. A record amount of foreign money is being invested in and opened up in Mexico. However, remittances from the United States also set a new record. In other words, the Mexicans who reside in the United States have remitted an unprecedented sum of money to their family members back home. The peso gained value against the dollar as a result of all this capital influx. But in order to understand the situation at hand, we must return to the central banks. So if inflation falls sharply in the US, it is possible that the Federal Reserve will stop raising central bank interest rates, and even start lowering them. In this case, the dollar's value should decrease in comparison to other currencies, especially the peso from Mexico. The dollar could potentially go as low as 17 or perhaps 16 pesos to the peso. However, this scenario may be overly optimistic. The more likely scenario is that the Federal Reserve will maintain high central bank interest rates and inflation will remain at quite high levels, between 4% and 6% until 2023. In light of this reasoning, the dollar to Mexican peso exchange rate ought to remain the same or possibly decline to 18 pesos to the dollar. In the case of the Mexican economy, if inflation remains at current levels, the central bank will maintain central bank interest rates at 10% or even raise them even higher. This is a likely scenario as inflation has not come down as much as expected. As a result, this will maintain the Mexican peso's strength at its current level or perhaps even increase it. In relation to the dollar, the Mexican peso's trajectory appears to be highly positive. The peso is likely to remain at 18 pesos to the dollar, while it could go as low as 16 or 17 pesos. One scenario, though, could result in the peso depreciating versus the dollar. This would be if inflation in the US does not come down, or even rises from current levels. If this happens, the Federal Reserve will have to keep raising central bank interest rates, which would further appreciate the dollar against the Mexican peso. Then if inflation in Mexico starts to fall sharply, the Mexican central bank will have to lower its central bank rates, which would also cause the Mexican peso to lose strength. That brings us to the big question. So what will happen to the Mexican peso? Will it lose value against the dollar or will it maintain its strength? That depends on how things turn out, obviously. In the near future, it's probable that the peso will keep rising versus the dollar. But I'd like to know what you think. How do you feel? Post your thoughts in the comments section. Thanks for watching the Money Street, and don't forget to click the subscribe button for more financial videos.